Welcome to Markets Now. I'm Michelle Rook with Tomm Pfitzenmaier with Summit Commodity Brokerage. We had mostly lower grain trade today, except for, I believe, Minneapolis wheat. And then over in the livestock futures, cattle higher, hogs lower. Tom, let's start off talking about soybeans, more new lows here today. And I guess, do you think we're anywhere close to a bottom here? Because we have report hangover, weather, you name it. There was a lot of negatives.
Yeah, there were. I mean, the report obviously started it. The crop condition rating coming in unchanged on Monday afternoon sort of continued it. And then you've got a weather forecast that's not, uh, well, it's darn near ideal for soybean production for basically through the next 2 weeks or toward the end of the month. So the soybeans just don't have much of anything going for them. You got the funds with a close to record large short position, and they seem to be comfortable with that. And why wouldn't they be? So, yeah, there's just as far as where our bottom can be, I think a lot of people have their eye on 950 on the new crop November contract, which we didn't end up. I guess only about 12 and a half cents above that. So we're getting right close to a level that a lot of people think is going to find support. Some of my technical indicators did turn back up here just at the close today. So I guess we'll see if we can catch a little bounce.
But how do you absorb, you talk about 600 million bushels ending stocks going forward, but we have a 25% increase in ending stocks we still have to absorb. And so where does price have to fall to do that?
That's the question, isn't it? I mean, well, a lot of people say, well, we have cheap prices. China's going to step in and support it. But the Chinese can read the charts as well as we can. They know what the situation is. And why would they get in a big hurry to buy soybeans when they can see us in a solid dying trend and making new lows every day? So, I mean, at some point, that's going to be what happens. That's what's going to be what supports us. But I don't know, is that 950 or is that all the way down to $9 on the new crop soybeans? And I certainly don't think with that kind of a carry out, you can roll that out.
Yeah, no doubt. And they had a token purchase, I'll call it, here this morning, almost 5 million bushels. But new crop exports are down, 55% from a year ago? That's pretty low.
Yeah, it is low. And, we've sort of chased that Chinese business away. They're certainly favoring South America versus us. So we got that to deal with. We've got some political stuff going on that I think has made everybody a little cautious in terms of who the leadership's going to be in the U.S. and how that's going to affect our trade relations going forward. So there's a lot going on here, extraneous of the of the basic fundamentals of the supply and demand.
And what about corn? We were lower there as well, and certainly a lot of talk about the key reversal after yesterday's WASD, but we just basically followed corn followed soybeans.
And wheat, yeah, and I don't know how key that reversal was yesterday. I mean, the only thing bullish about that report yesterday was that it wasn't bearish. So, the yield increase certainly wasn't a positive. And with a good supply demand, or excuse me, good crop condition rating out yesterday afternoon, you'd have to say that maybe there's a possibility that yield increases again in the September report. The weather for the next 2 weeks, again, just as it was in soybeans, is certainly ideal for corn. You had I have a lot of farmers I talk to say they think they're going to have record yields this year like they've never seen before. So, for years we've wondered what could happen if everybody had a good crop, and this may be the year where we actually find that out. So, there's not a lot that's friendly about corn. Certainly, the farmer sitting on all this big old crop supply um, probably came into action a little bit this morning, and as farmer, I mean, a 5-6 cent rally, and there's some corn's going to start to move again. So there's a lot going against corn, irrespective of some little key reversal yesterday.
No doubt. And like you said, farmer selling picked up here, and we'll probably see more of that going forward. Let's talk about the wheat market again, just like corn. It wasn't that the report yesterday was all that bullish. It just wasn't as bearish as we thought it was going to be. The problem there seems to not be supply as much as demand, right?
Yeah, which is kind of surprising given that we have the cheapest wheat in the world. All the world wheat around the world is much more expensive than ours. So you'd think that would generate some better demand than it has so far, and maybe ultimately it will. You get Chicago wheat down closer to $5, and I'm guessing that you're going to start to see some pickup in demand. But again, end users are watching the market. They can see us in a downtrend. There's no reason for them to get in a big hurry. Eventually, that's probably going to change, but it may take a while for us to work through all that.
Let me ask you as well about the funds here. Like you said, they can read a chart, they can read weather maps, all that sort of thing. They did liquidate some of their long position in the corn, or their short position in the corn, I should say, last week, and it really didn't produce a rally. What do the funds do now? Do they just stay pat with what they've been doing because it's working, or what?
I mean, it's a classic rule of thumb: keep doing what's working until it's not. And I think that's just exactly what they're going to keep doing on on corn and soybeans. Like you said, that they did lighten up on their corn position, which would, I guess, lead you to believe that gives them more firepower to keep add back onto those positions. Until something changes here, I don't. I mean, if you're comfortable being short, why would you change that? Except to maybe the market gets a little oversold and you take occasional profit and that sort of thing at the end of the month, maybe that picks up a little bit. But in the meantime, I guess you just keep doing what's working.
Yeah, the trend is your friend, I think you always say.
Right.
What about the cattle market? We did have an update, but it seems like we get one-day pops, and then the funds just come back here and sell and liquidate some more. Is that kind of what we're destined to see going forward, or not?
I think so. I mean, the cattle market really got flubbed up here a couple weeks ago, and saw that big plunge down in the equity market that drug the cattle and the whole livestock complex down with it. That's when we put that low in October, cattle down at 176. Now we bounced nicely off of that, but now we're up against resistance in October's in that 182 range. So we really need to get above that to be able to move up higher. And we could. The numbers continue to be positive, but there's a lot of uncomfortableness, I guess you'd say, about what's going on with the economy, what the consumers going to do with their credit cards tapped out if we do go into a recession. Is that going to have some effect? So there's some negatives that are sitting out there in the cattle market too. Now feeders are being well supported by this weakness in the grain market, so that's not a big surprise to see the strength there. I just am not sure how much the fats have it, at least in the short run here.
But we have such a big discount of the futures to the cash. That should
Yeah,
help, shouldn't it?
that has helped, and everybody stayed fairly current, which weights tend to be a problem in the cattle industry, and I mean weights are up, but they haven't been enough to really cause a problem yet. But yeah, I don't know. It's the age old problem: numbers versus whether the demand can hold up, I guess.
Yeah, no doubt. And speaking of demand, let's talk about hogs. Not only are we in a downtrend, but we have started to see the cash market slide. So where do you see the hog market going? Is there any hope that we can stop the downtrend?
Well, we were trying to do that in the last 3 or 4 trading days, and my indicators turned back lower to close today again. So
Mm.
I don't know, that market's really going to continue to struggle, I'm afraid. Um, again, the consumer is a problem there as well as it is in the beef and the poultry side. So I don't know. It's a little hard to get optimistic about the hog market, actually.
No doubt. All right, thanks, Tom. Tomm Pfitzenmaier, Summit Commodity Brokerage. That is Markets Now.